What's up everybody, Tom here with another video, and in today's video we take a look at the week ahead for the markets across the world, including the stock markets, commodities markets, and of course this rally that we're seeing post-Christmas in the crypto markets. Santa's come and I hope everyone had a great Christmas, but the question is, will he stay for the end of year cheer? Will he push these markets up, or is there a crash coming? Stay tuned guys to find out more. See you soon. Alright guys, well a lot of people discuss of course the Santa Claus rally, and many people are aware of what it is now. It's obviously that period of time between the trade after Christmas to when he goes back to the North Pole after the new year. And this tends to have a positive correlation to do with the S&P 500 and other markets around the world. But is Santa weakening in the markets at this stage? You'll notice here that some studies from 1972 onwards showed that the Santa Claus rally has produced an S&P 500 average gain of around 1.26%. And this was actually below the previous Santa Claus rallies between 1928 and 1972. So while Santa's losing a little bit of steam in the markets, there's still a positive correlation. Statistics do help us to make better informed decisions with our technical analysis and fundamental analysis in the markets. And we'll be taking a look at some really key levels of resistance breakout and where possibly Santa may be able to take us on the stock markets, crypto markets, and commodities very soon. So let's now take a look at the heat map for the Friday trade before, of course, Christmas itself. And you'll notice that it was mostly muted. There was nothing really strong except for one of our outliers. Of course, Tesla up 5.76%. It's amazing how this stock rebounds. We were $900 only a few days ago, and now we're well over $1,000. So we'll be taking a look at that later on today's video as well, along with our Apple analysis, which is currently up around 0.36% for the Friday trade. Let's look at the sectors and look at the indices themselves. So were they all up? The answer is yes. They were all rallying into the close. Slight selling there in the last couple of minutes. I'm not sure if we really should look too much into that. Probably just a bunch of people closing off. Maybe they need to buy some last minute presents. But 0.8% on the IWM. Great to see the Russell 2000 doing a little bit better. Nasdaq up 0.79 and S&P 500 at one point during the day quite strong, but ended only 0.62 up. When we look at the sectors within that, we had consumer discretionary doing the best, XLY. The more defensive sectors in the markets weren't really moving as hard. And that's actually not a bad thing. It means that people are moving into potentially growth and risk on assets. Let's get over to the technical analysis, and we'll start off here with the VIX. And you'll notice the VIX, or the fear index, is actually underneath 20 now. And that's cemented a week underneath 20. So for all of the bears that were getting excited about shorting the market off, it seems like that was short-lived. We had that incredible spike of the VIX, and now it's come right back down to earth. So if we continue up, where do we expect the VIX to go? Mostly towards that 15 level. And then that is where we actually go counter and we start to say, well, is there a chance that we're hitting a resistance level on the stock market? And sometimes you'll find the VIX at around 15, the stock market at a key resistance that we'll look at today, and it can cause maybe a little bit of profit taking or possibly even a short style trade. So this is the thing, we want to bring multiple markets together to come up with a great idea. Speaking about multiple markets, we've also got gold, and this is trading at this stage in the futures market. And you'll notice it's trading about 1807. So we've talked a lot about the 1810, 1811 zone. We know this is the key resistance here for gold. And there's some interesting things that have happened with gold in the last couple of days of trade. If we take a look at the daily, it's bucking a lot of what a traditional technical analyst may think is weakness. So we have here a shooting star or pin bar candle, another rejection candle, another rejection candle, and then of course we saw the first signs of bullish action from gold. Gold is now slamming into this 1810, and this is an exciting level for gold and silver traders, because if we can get through this level, this 1810, 1811 area, we allow a lot more ramping to happen in this pair. And even if we take a look at the weekly, look at the next level. We've got from 1810 to 1830 fairly easily, then possibly that 1875, which is a large move for gold, and then we've got that 1910. So we've got some clear resistances, a very nice level starting to appear here on the weekly, and a lot of decisions towards the upside, or at least it looks like that's what's starting to appear. Once we move through this area, good times should be there for gold traders, at least from a technical perspective. Another strong trade here was silver, and silver broke out early. So we had that bullish rejection style candle, and we ended up closing the previous week as a nice bullish candle as well. If we go down to something like the daily, you'll notice here it broke through that key level of 2260, and that's led to some extra gains here from silver. Huge breakout, big trade there, and a lot of people are probably looking at this from some sort of 8-hour or 4-hour inverse head and shoulder. If you go over to the 8-hour, it looks even cleaner there. You've got something like the left shoulder, head, right shoulder. Doesn't really matter if you see it as a pattern or you just see it as a key resistance break. This is the zone. We know there was many times it hit this level, and once it breached through, it's starting what you would call a participation phase. So silver and gold certainly improving at this stage. Another commodity that's improving is oil, and we see US oil do another really great daily breakout. It broke through that 73. It's come back down and tested that area from the top down, and you'll notice the resistances here, guys. They're becoming support, and hopefully we get some further rallying. We're through the daily 20 now. We're going to contend with this daily 50, but there's a lot of action that could be had here in oil, and we've got 75 as the next key resistance to move towards, and then after that, possibly even as high as a 79 a barrel. So for anyone looking for cheap fuel over the Christmas break into the new year, if you're going on a holiday later on in January, there's always a chance that oil might unfortunately be back here in a barrel over that period, because you can see here the strength, the base that's been put in is quite substantial. Go down into things like 2 hours, guys. It does help out here when you're starting to think about the key resistance supports, and you'll notice you have a lot of touches there, and it comes through, and then all of a sudden we get that conservative entry, and that's why it's probably ramping off this stage. So it's good to have multiple time frames in your analysis and then make decisions from that point. Let's look now at the stock market, however, and we'll talk about some of the key zones. So we correctly identified 900 being a massive support here for Tesla, and it's bounced off that zone, breached this downward trend, and then just come out of the gates incredibly strongly. There's been some good day trades here. There's been obviously the day trade into the $1,000, and then there's been the $1,000 breakout here that happened in the previous session, all the way up now to the previous supports and resistance zone of around that 1,070. So Tesla is strong. There's no doubt that people are feeling very confident in this particular stock, and we know that when retail get into it, it can have some serious ramp. So where is the next level of resistance should it breach its current zone? And I would argue it's around this 1165 area. If we breach here from a day trade perspective, the next point of call you would think is going to be around here. And a lot of this comes down to understanding the closure rate. So we've got here an open close. We've obviously hit this level, opened the next day right around here, and sold off. So we've got some form of resistance around this 1165 area. That's certainly going to be the next zone of interest. For anyone that's missed out on the current rally, what are they looking for? Well, you're looking for pullbacks back down to 1,000 now, hopefully seeing some turnaround during the day, and then of course taking that ramp into the next 1,067 and possibly even the 1165. So people that have been feeling good on Tesla, it's certainly been improving. It's shown some great signs here. And even the weekly, if you look at the weekly, that's a huge engulf over the previous candle. So it's come off the weekly 20, it's come off the $900, and it's looking like it wants to go and test these highs again. So hopefully it does. And many Tesla traders, it's good day trading, good intraday trading stock at this time. Big percentages allow for, of course, a lot of volatility, and that volatility tends to lead into some, pretty large movements that you can get. I mean, 5.76% is not a slouch for the day of trade. Let's move over to Apple. Now, Apple is slowing here. I've talked about this several times from a fundamental basics. If you're thinking about it, it's pretty expensive at current earnings. I think the volume has also dropped considerably here. And what that really is telling us is it's probably more in consolidation. Apple does have a tendency, similar to Tesla, to run out, do really, really well, and then to kind of go sideways for a period. And remember that we're in the period between after Christmas now into the new year. What does that bring in the market? Illiquidity or low liquidity. And when you have low liquidity, you can see a lot more potential volatility in those days. You can also see a lot smaller moves. So I'm not sure if Apple's going to be a stellar trade here the next couple of sessions. It's bounced off the daily 20. If we think about the 4-hour time frames, it's not really at any key resistance or support. And for Apple traders that are looking for further really big gains, you're looking for it to get past that 182 If it gets past 182, I mean, it could ramp quite hard at that point, but at this stage, just stuck in the middle of the zone, looking good, nothing negative, except for the volume is dropping significantly from day to day to day, which you would probably expect this time of year. Some interesting markets though, some of Cathie Wood's funds, of course, we've discussed these for 2022. We might even do a live stream for about half an hour and discuss some of the key things that we're looking at for the year ahead. But Cathie Wood's funds have been belted in 2021. It's really not very positive here. Things like the biotech space, things like the hyper stocks, they haven't done well. And you can see the base formation here of the bottoming effect, the key resistance around the 65, and even the long leg doji that's now appearing on this chart. So you can see the long leg doji, we get a closure above that. What's that going to do for us? It's going to show us decision made and potentially begin a little bit of a rally in these biotech stocks. So worthwhile watching some of these funds. You may not be your cup of tea, but a lot of the stocks underneath them are improving. And you'll notice even here with the predominant ARK K fund, the innovation fund, that is improving as well. But you would think this would be improving. I mean, Tesla is a huge component of it. It really does show, considering Tesla's up, that the rest of the stocks in this fund have been really terrible for 2021. Will they get a turnaround? Things are starting to look a little bit better on the charts, and you can see the base formations coming in. Another thing that's looking better on the charts, IWM, Russell 2000, volume is dropping as we would expect with all of these indices right now over the break, but we got through the 220. Now the 220 will hopefully act as support for this market index. We've got 226 as the next key resistance, and we've talked about some of the key zones here. If we go through, think about the 2 hour, what's going on here, guys? Well, we have a turnaround, a potential ramp here into the 226. This is a very possible scenario. If we breach 226, we've put in a massive double bottom. So we've currently got a double bottom within a massive one. And I like this market from the index perspective because there is a lot of opportunity. This has been probably the worst performing index. The Russell 2000 is still really trading very similar to where it was at the start of the year. If we think about it, 11th of Jan, 210, now currently just trading at 222, but was 210 a week ago. It just shows you the lack of, what you would say, value or lack of movement here that you've got over the year. And if it does breach through 226, that could really begin a lot of ramping for this particular market. So think about these levels, guys, 220, 226, some key support resistance here for the Russell, and things are improving on this chart. Move over to the QQQ. This is, of course, the Nasdaq, and the Nasdaq is finding some issues. It's gotten into resistance. We've got resistance here through the 400. We've detailed that several times that we're looking for a 400 breakout. It's come up. It's gotten close to the area, which we suspected it would. It's ramped incredibly hard in the last couple of sessions, which has been great trading for many day traders and many just investors and anyone that's been looking at it. And we've been correct so far. I think the S&P 500 really needs to take us to the next level. And we'll talk about that in just a second. So volume again down, liquidity is down. All of these types of things are happening over the Christmas break into the new year. And while we expect Santa to probably be around, don't expect the volume to be big. Maybe smaller ranges is something that we can expect. It's the crypto market that's actually looking much, much more interesting at this stage. So we're in a trading range. If we breach through 400, where's the next level? Some people will actually be taking the distance here, extrapolating that out, moving it up higher, and then bringing that in with our top end trend line. So they're going to be doing this, extrapolating that, and then saying, okay, that is our target. So about that 420. So it could be a good target for that later in January period as well. That's multiple percentage points. Let's think about it. It's about 5.29%. So you'd be surprised how much ramp can possibly happen here on the QQQ should it get through some of these key zones. Let's talk about the big market though, and that is the S&P 500. And I was very happy, and I think a lot of the community members were pretty happy with the closure that occurred here. 47.25. That is now an all-time high closure. Not an all-time high, but an all-time high closure. And closure is the key. So this is kind of pinpointing that idea that we're going to continuously ramp. And we've talked a few times over the idea that Santa might have pushed us into the monthly R2. So the monthly R2, this is the pivot, is sitting around 4,800. It's a very key zone and super interesting area to be looking at the markets. We've also got a great ascending channel here from a perspective of profits, stops, where the market comes back down to, profits, etc. And I would love to think that we could use this in 2022 to take advantage of some great technicals. I mean, this has now been really good at picking up the bottom, could be great at predicting the top. And if it does then come back, where are we going to be looking at? Well, of course, the bottom of this channel, the trend line is going to be looking at. So something worthwhile having on your charts into 2022. And the daily has closed above the previous one. Let's take a look at the weekly. Again, you'll notice the closure is above, even though it's marginal. And a lot of day traders are going to be in around this green boxed level, looking for signs in the day trade to get that turnaround. Bullish hammer, engulfing candles, all of the signs of strength in the smaller time frames. That's what you're looking for when and if it does come back down to these little 4,700 zones, and you're looking for a turn into the 4,800. But let's talk about the most exciting market probably for the break, and that's going to be the crypto market. There's no doubt Bitcoin is ramping. It hit our resistance, and funnily enough, what did it do? Sold straight off it. So just under 52,000 is where we've currently had the resistance for a while. We've been talking about this being the super exciting zone for the crypto markets, and I think the crypto market has been improving across the board. You guys have got this correct. We've seen plenty of different cryptos improving, and we'll take a look at those just now. So Bitcoin, first off, weekly, starting to look a little bit better. We know the weekly 20 moving average is right around that 51.8. So this is a zone of resistance. If we breach that area, what is the next thing that's going to most likely occur? Well, we've put in an accumulation base. So that's going to be fantastic. We then could breach it, pull back down, and hopefully continue that ramp up. But how much left-hand side problems will we come into? I mean, there are some issues around 54, I guess you could argue. But in general, the next level could be always up to 60,000. So 58, 60,000. So there could be some really nice ramp out here should Bitcoin get through that 51.8, 52,000 level. It's looking really exciting. The base is finally in, and we've seen when bases have then closed above, the type of ramp that occurs in this crypto market. So it's close, guys, and that's exciting. Are you guys excited about crypto? Let us know in the comments down below. Which is your favorite cryptocurrency right now? Is it Bitcoin? Is it Ethereum? Is it Cardano? Is it one of mine like Polkadot? Let's find out which ones you prefer. We detailed ADA. So we detailed this particular one, which is Cardano, and we talked about the signs of recovery. I think we have seen a really great ramp here. So this is where we breached out. This is, of course, where many people got that signal to potentially buy from a technical perspective. Go and have a look at our other videos if they interest you. And then we saw it move up. Currently seeing a series of higher lows, but we haven't breached that 150 yet. So Cardano looks pretty good, but it's across the board. We think about things like Polkadot. That's already starting to break out here, trading at 31.30. Base looks to be in. It's trying to close above this previous resistance. Things are starting to improve, and it's like this with so many cryptos. Matic, a new all-time high. We detailed this one as well. There's a lot of cryptos that have just improved. They've shown bases, and that are hopefully moving forward. And even things like BTC shorts, they've continued to come down. So it's not like the big whales are really smashing around this crypto market. So there could be some end of year cheer here. Santa might now visit the crypto markets even more than the stock markets at this stage. We don't have that much big news for the week ahead. Of course, here is the idea of tons of bank holidays across the board for Monday, the 27th of December. Then we've got the 28th. We've got bank holidays in certain places, and it keeps going through the week. So it'll be a light one with trade, low liquidity. The crypto markets seem to be the ones that are firing, and we do wish you the very best. This will be our last video for 2021. So thank you so much for joining us throughout 2021. We wish you the best and the happiest of course, New Year's with your family, friends, and everybody else that you hang out with. And of course, I think 2022, and many people in the community do as well, will be the year of the trader. So make sure you subscribe, smash that like button, guys, and we'll see you in 2022 with some great content together. Lots of improvements coming to the channel thanks to your feedback. See you soon, guys. Bye for now.